All right. What is up, tycoons? What is up, traders? Super excited for today's video, coming at you with the viewer request on First Solar, FSLR. I do these viewer requests every single week. So if you want to see your stock, your cryptocurrency in the next video, all you have to do is comment down below. I'll be happy to get to it. Looking amazing, right? Clean energy has been looking amazing. First Solar is looking very good. We have higher highs, higher lows. We recently just broke through our bearish divergence trend line on the relative strength index, and we'll take a look at the MACD as well as give you guys our bullish price targets to the upside and the three major support levels we need to hold if we want to continue this uptrend. So make sure to smash the like button, subscribe to the channel if you guys are new, and we'll get straight into it. All right. Now, first off, none of this video is financial advice. This is all just data, and I'm just reading some of the data from the chart and giving you guys my analysis on it. All right. So let's go over the bearish divergence, right? So initially what we were doing was we were making these highs, these higher highs, and these higher highs, right? So clearly, the stock was in an uptrend heading higher, but if we look at the relative strength index, we were losing strength, right? And in this case, it's known as bearish divergence. So we have a high here at the same point, and we have a lower high while the stock is making a higher high. That's bearish divergence. You see, we got a slight pullback afterwards, okay? And then up here, right, we can make another higher high, and over here we make another lower high, really just respecting that trend line. That ended up resulting in a pretty sharp move to the downside, but look at where we ended up holding support right here at our 50% retracement level, right? We can see that we find some support there and we're able to push up higher. So these three levels, the 38.2, the 50%, and the 61.8, those are the three major Fibonacci retracement levels and the most well respected. So think of it like this. Nothing moves in a straight line up or a straight line down. What you do is you move up, you retrace, and then you continue higher, or you move down, you retrace, and you continue lower. Now you can spot a reversal, right? If you break through those major retracement levels, that's how you can spot a reversal, right? But in this case, what we're doing is we got the move up, we got the retracement to our 50%, and then we're continuing up higher. So it looks like we could be getting an ABC move all the way up here, which would take us up to about $200. Okay, now we have a bullish price target below there of 187.65. Those are going to be the two targets that I'm looking to see if we can get since we broke out past our major breakout level of 173.67. All right, so I know the chart, it kind of looks like there's a lot on here, but we're just focusing on this ABC up, right? We have our three major retracement levels in case we do get some type of a pullback. We want to hold these levels so that we can push and continue up higher. Those are going to be 167, 162.3, and 157.54. Now, preferably, we want to stay above our breakout level of 173.67. So if we do get some type of a pullback, we want to preferably hold up here and continue to try to push higher. But if we do break below there, it's still a perfectly healthy retracement, even if we come all the way down to 157.54. Now, we also have this trend line here of support that we've bounced off multiple times already. So, if we pull back and we come over here near our major retracement level and the trend line right here, that's going to be a really interesting spot to see. Do we bounce and break below, and do we end this trend possibly, or are we going to be able to, bounce and continue heading up higher? So these are the price levels that I'm watching right now. If you pay attention to the MACD is really good at giving you entry and exit signals, right? So an entry signal is going to be when this red line crosses above the white line, right? So you can see that that really started the rally over here. We had a massive move to the upside. Even recently, right, we just got the MACD crossover, right? The red line crossed above the white line. We've had a very nice push to the upside. An exit signal, which is something that we're going to be cautious of, right? If you're trying to go long in this, something you want to watch out for is going to be the red line crossing below the white line. If we look here, we got a MACD crossover right around here, and then we had a sharp move to the downside to our major retracement levels. So something like that may happen again, and you need to just be cautious of it, right? So the MACD is going to be really useful for spotting those possible exit signals. Now, when it comes to the relative strength index, we do still slightly have a bearish divergence, right? If we take a look here and we just see, we have this high, okay? So we have a high here. We've headed up higher right here. But here we have a high and we still have a slightly lower high. So this is technically a bearish divergence we still have that could cause us to pull back. But what we want to see is we actually want to see us flip this old bearish divergence that caused the initial drop right around here, along with the MACD sell signal. We want to see us start to bounce off of this and see if we can flip this old resistance into a form of support and really try to push higher. We are at overbought territory above 70 on the relative strength index, so it is a time to be cautious, right? It's not as wise. The risk to reward is not as good and skewed in your favor trying to buy in here after we've already broken out and when the relative strength index is so overbought, or not even so overbought, but just in overbought territory. A general rule of thumb is to not buy into something when it's at these overbought levels and wait for a pullback. Okay, so just because we are overbought doesn't mean we can't go higher, right? As you see here, we've been much higher on the relative strength index than 70. We've come all the way up to these extended levels here. So if we kind of use this as like maybe a support or a resistance line for our RSI, you see that there's still plenty of room that we can run up as we've recently come up to these high levels before above 80. So it's going to be really interesting to see what happens in this. As an added bonus, right, what we're going to do is we're actually going to take a look at iClean, which is one of my favorite ETFs, right? I'm very bullish long term on clean energy, and I do think that there's a lot of potential there. And, especially the Inflation Reduction Act is going to be, which is going to take place over the next 10 years. A lot of these clean energy companies are going to be beneficiaries of this Inflation Reduction Act. So again, no financial advice, but just something for you to do a little bit of your own research in and see if it's something that you would like investing in. If we take a look here, it's also looking pretty bullish, right? So what did we do? We had to move up. We came down and look, just like First Solar, right? We bounced off of our 50% retracement level and we're continuing up higher. Now, we haven't broken past our major breakout level on iClean, which is 2136. So keep an eye on 2136. If we're able to break out above there, we could come up and hit our bullish price targets of 2274 and 2367. If we get some type of a pullback, we would want and prefer to pull back and come to our three major retracement levels, which is going to be 20.12, 20.35, and 20.59. If we do pull back to some of those and then get our breakout, that's perfectly fine. That's perfectly healthy. Below these levels, most likely we're going to come and retest our previous lows and potentially even come down and try to make new lows. But we do have an uptrend. Okay, we have highs here. We have a higher high. We have a low here. We have a higher low. So things are looking good. There are bullish sectors in the market. The market does look like it's going to break out, but you have to be cautious, right? We did break this trend line right here. That was a very nice break of the trend line. We really just need to get past this major breakout level to continue up higher.